Amnish Aggarwal, Head of Research at Prabhudas Lilladher, is now with us. Amnish, what was your key takeaway from HDFC Bank, and does it change your opinion, the trajectory that HDFC Bank share price has been in?
Okay, thanks. You see, the main thing is we are positive on HDFC Bank in a very structural manner. Having said that, what Mr. Jagdishan pointed out is clearly what is visible, that because of merger, HDFC Bank today is having on its liability side the debt or the bonds, etc., which were actually raised by erstwhile HDFC Limited. So that is one. So once those bonds or those debts mature, then they will be repriced by the deposits, or you can say the saving deposits of HDFC Bank, which will be providing some prop-up to the merchants. But having said that, I think in the near term, what the markets have been worried about is the LDR ratio of 110% plus. And given the size of HDFC balance sheet, you need an incremental 2.5 lakh crores to bring it down to a respectable level. So I think, yes, the intent of the company is good. But having said that, I think it will take HDFC Bank a little bit of time to, you can say, put the balance sheet back in order in the range of, say, well, your LDR goes to 80-90% level, which is, I would say, which will be comforting for the investors. So having said that, I think the current valuation seems reasonably attractive for the long term.
Okay. So does it, in the near term, is there a bit of a readjustment higher happening at all, or no? Not really?
You see, the main thing is if your deposit growth, say, hypothetically grows at, say, your 20%, but your loan growth is also 16-17%, then your incremental adjustment will not happen at that sharper pace. So there are two ways to it. One, that you either increase your deposit growth significantly, and for which you have to pay higher rate of interest in comparison to what your competitors are paying, or secondly, you have to slow down your loan growth. So unless until either of these things happen, the LDR ratio will not come down to, you can say, sub 100% level at least.
Okay. Amnish, hi, good morning. I wanted your thoughts on Coal India. There was that fall in the e-auction premium that pretty much spooked the street. A lot of brokerage downgrades that have come in this morning as well. As an investor, how do you react to all of this?
You see, Coal India has seen a very sharp rally in the stock price on hopes that basically India needs thermal power in the long term, and so the production of coal will continue to be one of the, you can say, coal will continue to be one of the preferred mediums, and the government will push for Coal India to increase the production. Now, as far as the pricing is concerned, I think pricing in e-auctions, that always remains volatile, and there are instances when your pricing in the e-auction markets will not show the kind of premium it used to be having over the, you can say, the long-term contractual values. But I think post the sharp run-up which we have seen in the stock price, particularly in the last, say, 3 to 6 months, I think that might be actually warranting some sort of a caution as far as the stock price is concerned. Fundamentally, I don't think that there is anything structural which changes at this point of time, because even if you look at the goals of India or globally in terms of the renewable energy, thermal coal will continue to get more and more investments, and we will require more and more coal to be produced in the country.
Got it. Amnish, two names. One is Federal Bank, just going back to financials for a bit. The stock had rallied about 10-12%. Mr. Manian was one of the names being proposed to take over after the current MD at Federal Bank steps down, but that's not happening. There's Rejig at Kotak, and he's been elevated. So is there disappointment for Federal? And second is Paytm, Amnish. 2 days in a row, 5% higher. Is it also forming a bit of a bottom? Go on.
You see, as far as Federal Bank is concerned, yes, if your change in the management would have taken place, okay, then it would have removed the uncertainty in the company. Now we are back to the square one, and financially the bank continues to be in good shape, but these kinds of, you can say, situations can result in some sort of a correction in the near term in the stock price. However, structurally the stock has done well, and the company continues to look good to us. Now, as far as Paytm is concerned, I think it is more to do with the 15-day window which RBI has now extended to Paytm. Now, whether they can make the required adjustment thereon, or whether they can tweak the business model, is still something which is I think, not clear. Now, if you look at the current stock has taken a big beating. Now, if there is some, you can say, if they are able to make the required amendments in the next, say, 15, 20 days incremental, which they have got, or you can say, or some other corporate action happens, I think that is what is driving the stock price at this point of time. So I can't give you more view than this because we don't have a coverage on this.
Amnish, by any chance, do you, at Prabhudas Lilladher, do you all look at Quest Corp? The company which is into staffing, they provide a little bit of facilities management. They announced a demerger into 3 entities and the stock ended higher.
No, we currently are not looking at staffing companies.
Okay, all right, not looking at staffing companies. I just want to pay a quick sort of attention to Tourism Finance Corporation. The stock, by the way, has had a fantastic move recently. So, in July, September of last year, stock was about 100 rupees, approximately 100. It's now at about 210 rupees. The high this month was, by the way, 250. So it's off the highs, but there is a very large block deal, if you can have the details up once again, which has happened. There was another block deal, and Nimish, by the way, had highlighted this in D Street Chatter a couple of months back. There was a large block deal which had happened at lower prices as well, and this is the second one which is happening at this point in time. A pretty significant percentage equity getting changed hands this morning on Tourism Finance Corporation. Amnish, just a quick word, if you will, on names like, again, I'm not sure if you have coverage. Look at something like a MRPL. 100 rupees flat in 4 days. What's going on? Chennai Petro, MRPL. Is this just momentum, or, they will make significantly higher sort of refining margins, etc. Standalone refiners.
Structurally, what is happening in this entire oil refining and marketing space is that people had started assigning them very little terminal value. If you look at their, you can say, numbers or the financials. Now, with the probability, first of all, some of the large EV players globally, they have cut down on their guidance. That is one. And secondly, there is a growing realization that even if India meets the emission targets over the next, say, 5-7 years, even then, the petrol and diesel cars or the vehicles, they are going to stay. So incrementally, going by the fact that India is growing, there's a need for more fossil fuel also in the near to medium term. There's a renewed interest in all these companies. Now, as far as your refining, because for example, MRPL and Chennai Petro, they are not into the marketing side. And the refining margins, I think they literally have peaked out in the last quarter, and after that they have softened a bit. So I don't think anything to do with any sharp upsurge coming as far as the refining margins are concerned. But I think it is more to do with the overall structural adjustment which is happening in the entire oil refining as well as the marketing space in India.
Okay. I wanted your thoughts on how to approach the defense space and the stocks, right? The DAC has sanctioned 80,000 crores worth of projects in the defense sector, and looks like there's going to be a lot of order wins for some of these names. But the problem here is that there is price realization that we've already seen. The prices have gone up quite a bit. At this point, do you see value and growth in any defense names, or are you cautious now?
You see, defense stocks have been riding a big wave from the last year and a half. Now, we are just a couple of months before we actually head into the voting for the next Lok Sabha. And after your new parliament is in shape, the incremental orders for these companies, they will start coming only in the second half of FY25. Even in terms of execution, usually a few months after the Lok Sabha elections, even if the current government continues, then usually the implementation is slow, unless and until you can say you will be having the full budget and then reallocation and all can't be ruled out. So I think in the near term, if you look at most of the defense stock, I think they have rallied very sharply over the last year and a half. So there might be a pause in some of these names in the interim. In the long term, can these stock give you a CAGR of 15-20% as far as many of these companies in terms of their numbers or sales growth? That usually doesn't happen with these companies. So I would say that the maximum re-rating has already happened. And most of these stocks may be in for some pause for next 1 or 2 quarters. That seems to be a very clear possibility at this point of time.
What about specialty chemical names like a Gujarat Fluoro, Aarti Industries, Jubilant Ingriva? Q3 was another dismal quarter where, the financials have deteriorated for the third consecutive quarter. But anything which suggests that there are early signs of a revival?
Your view is that the revival doesn't seem to be, you can say, in place at least for the next 1 or 2 quarters, because the Chinese players have come back very strongly into the market, and China's volumes in many of these, you can say, chemicals, more so on the commodity and bit on the specialty side, they are much more than what India does. So they have got much more economies of scale and pricing power. And that is the reason, if you look at from the last 2-3 quarters, the numbers of most of these companies have been very weak. So our view is that at least for the next couple of quarters, the numbers of many of these players will continue to be weak, except in cases where the companies are having very strong niche and they are able to ride out of this.
Do you have coverage on PB Fintech, Amnish? Any thoughts?
I have coverage on PB Fintech, but having said that, I think this company has been on the forefront in terms of, say, online selling of your insurance policies. And they have got now incremental approvals to expand their business. So I think if you look at the entire fintech space, this is one of the companies which has been doing very well. If you look at, say, past 2-3 years ever since it has got listed.
Okay. All right. So that's PB Fintech for you. Maybe, by the way, smaller mid-cap names. I just wanted to ask you, Amnish, Shilpa Medicare. Do you have coverage? Stock was up about 9-10% yesterday. It was, by the way, also part of our D Street chatter list a few weeks ago. Stock's starting another 1.5% higher. Do you have coverage here?
No.
Okay, you don't have coverage there. Sula there was that block which had happened. Sula was a big loser. Maybe we can look at what's happening there. I think Sula entered about 8% lower, was one of the top losers. Maybe there is a bit of a pullback which perhaps comes through. 8 rupees higher is how it's starting. Home First, I'm not sure what the news was. I don't think there was any news, but the stock sold off 7%, especially in the last hour. There was a fair bit of selling pressure came through, starting about 1.25% higher right now. There were other names as well. Rate Gain last Friday saw a very sharp surge, 10%. Yesterday gave back half of it. Taj GVK has had a one-way move. These are all, where momentum has been. So a little bit of shakeout in some of these names yesterday. Sonia.
Also on Z, right? If you notice, the stock in pre-opening is up what about? Let's pull up Z. It's up almost 10%. Yeah, okay, 7% now.
Yeah.
There's a dramatic twist now. The managements are sort of huddling together to make that merger go through in some form or fashion. It's perhaps a last-ditch attempt to revive that merger. But in any case, there's been a lot of volatility around this stock. The Z Entertainment up about 5.5%. But Amnish, very quickly, I wanted your thoughts on SBI because, that one's really been front and center in terms of buying action, trading action, etc. Do you see more upsides here in SBI in the near term?
Yeah, Sonia, definitely. We are very positive on SBI because if you look at the balance sheet, the kind of growth which SBI is showing, and the main thing is that today, if you look at many of these mid-cap PSU banks, the gap in terms of valuation between SBI and some of these banks is very narrow. And in the past also, SBI has traded at 1.7, 1.8 and price to book. Now, if you assign the peak multiple which SBI had in the previous cycle, then the stock has got the potential to even give, say, around 20% upside from the current level. So SBI remains one of the structural picks for us.
Amnish, thank you very much for your time this morning.